Good. One today is Thursday, March 6th, 2025. Jump day for Friday 7th. All right, let's go. Well, as far as setups, no new setups going into tomorrow. There's a few shorts that are catching my eye in here. And once the market bounces a little bit, we should see a plethora of shorts. For now, as I preach on the short side, when the market is very oversold, it's darned if you do and darned if you don't. If you try to short it, you have the mother of all bounces. If you try to buy it, then oversold becomes even more oversold, as I preach. Go ahead and drop your stop on CCL. We're in trend following mode. Well, actually, trail stop mode there. Hopefully, I know I just said hope, but hopefully we'll hit that IPT fairly soon. Don't split hairs, though. If the market's down big, we get fairly close to that 19-ish area, 1925-ish area. Feel free to lock and load. So a couple of shorts still catching my eye in here. If you had to do something, well, don't do anything. I'm going to tell you, just don't do anything today. This KTOS looks okay, but for now, let's just let the market bounce a little bit and see what comes out of it. And we should have a ton of shorts. Here's the CCL selling off awfully hard or fairly hard today, almost to the 200-day moving average. Not looking very pretty at all, out of the bow tie from all-time highs. And this is why I like the bow ties from all-time highs. As I explained in weekend charts earlier today, the most amount of people are trapped on the wrong side of the market when it begins to crack in earnest. Anyone who's long, I'm sorry, I'll slow down for my international clients. Anyone who's long is now in a situation where they have to think twice about hanging on to try to get back to break even. All right, let's get to the overall market and then drill down a little bit. S&P 500 tagging that 200-day moving average. The 50 to 200, I like to dust them off when the market begins to slide, just to give you a reference point. But we haven't done that since November of 23, so that's pretty impressive. This slide here, that's very impressive correction, if you want to call it that, or rollover, whatever it may be. But so far, it looks like it is in the early processes of rolling over. But the 200-day gives you a reference. It is well watched, and as long as it continues to hold, obviously, that's a good thing. Let's take a look at the NASDAQ Composite, back below its 200-day moving averages, both trend downtrend proper order, and then, of course, overhead supply. Rusty, why even bother, right? There it is, down 1.5%, right here, multi-month lows, remaining in a downtrend well below that 200, as it has been for quite some time. Really, I hate to kind of beat the dead horse and say the same things over and over again, but again, a lot of areas that tried to break out came all the way back in. Gold, the commodity, down a little in here. Gold stocks also down a little. We could see some setups there possibly soon, but they're being a commodity-related area, even though they're trending, they can be choppy at times. Defense selling off fairly hard, just wide and loose and all over the place, so nothing to get excited about there. Jets, the airlines, still look like they could be in trouble. UAL is one that's in a lot of trouble. You can add that to the Landry list too. Ideally, I like to see, again, the overall market bounce a little bit and some of these shorts bounce a little, even though sometimes your best opportunity can come on a minor pullback. But the airlines look like they could be, again, in trouble. MAGs back below the 200-day moving average. NVIDIA beginning to break down in earnest in here now at these multi-month lows. So that's looking fairly ugly. Banks all the way down to the 200, kind of bigger picture topping formation in place there. So it's not looking so hot. Unless we have the mother of all bounces from oversold, I wouldn't get too excited about this market at this juncture on the long side for sure. I'll have to keep them crying, right? Take a look at major drugs. One of those areas was down a little today, but that's one of those few areas. It and a few other defensive areas, as I've been saying ad nauseum, like health services, has been kind of bottoming out and hanging in there, but nothing to really get too excited about at this juncture. Semiconductors resume their slide now here at multi-month lows, lowest level obviously since December or September, I should say, of 2024. So still ugly out there. Bonds actually ended lower too. They're still below their 200-day moving average, as they have been for some time. So even some of these stronger areas or somewhat stronger areas, I mean, this is not a area you would actually buy, but kind of hanging in there on a relative strength basis. Utilities got whacked pretty hard today, even though I saw a few that are trying to set up. I wouldn't go after those at this juncture. So we're kind of in a wait and see mode, and it could resolve fairly quickly if we have the mother of all bounces soon. Then we have a decision on whether or not we're going to go short again, or whether or not it's worth going back long. But it'll take quite the rally for me to get excited about the long side at this juncture. But here it comes. You know the routine. One day at a time. Everybody have a fantastic night. We're talking tomorrow. Thank you so much.